Retail sales, if you back out auto, you back out gas, coming in May up 0.5%, so better than estimated. But importantly, you had April actually revised higher to 0.3% versus negative 0.2%. So in that respect, stronger. On a month-on-month basis, though, it did come in a little bit light. All told, down it was up by about 0.5%, so missed by about 0.1%, David.
Yeah, at the same time, you wouldn't say this is an indication of an economy in trouble, at least in terms of the consumer.
No, but in some respects, I think it's a little lumpy. The data can be really volatile, and April was so bad. So you also have to wonder, okay, let's just even it out. You look at like sort of an average and see from there. So it's hard to tell.
Well, it turns out April wasn't as bad as we thought it was. I mean,
true.
You know, if you average it out, I mean, it's half a percent per year, a month, right?
It certainly doesn't mean the Fed has to cut.
Okay, so let's bring in Kathryn Rooney Vera of Bulltick and Katie Nixon of Northern Trust Wealth Management. So Kathryn's already weighed in.
Yeah.
The Fed doesn't have to cut.
No, this doesn't mean that the Fed next week has to cut or even indicate July is a question. I think if the G20 results in failure, if President Trump puts 25% across the board tariffs on all Chinese imports, then I think July can be possibly or September in play. But at this juncture, even with the 6-month outlook, unless you think the U.S. is really falling off a cliff, and this number indicates otherwise, the Fed doesn't have the urgent necessity to cut rates.